Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Quick Look, an updated look at the Euro versus US dollar. Today's date is April 29, 2024. Let's get started. All right, when you look at the hourly chart, which is the one I'm going to focus on here today, these dashed lines represent the day's trading range. So this day started down here in the Asian market and then moved higher, and then we moved lower, and then we moved higher, and then we moved lower again, testing the Asian session low down through here before moving higher once again. Now the last move to the upside has continued to find resistance in this yellow area. This yellow area is defined as a swing area where there's a number of different swing highs through here. Yes, we moved above it here and here and here. Each of the time the market moved above those levels. It traded a fairly limited amount of time above before rotating back to the downside. The other swing levels come back to this area right through here, where at one point it was a support level through here and then became a resistance level. And when we break below here, it tested it and moved to the downside through here. So you get the picture about why this level is important. Just above that level is a 50% retracement at 1.07425. If we get above both those levels going forward, if this were to reverse higher and get above those levels, then that would give the buyers the momentum and have price trading, perhaps trending toward the top side of this channel trend line, which is, by the way, moving to the upside. So on the downside, what gives this pair a little bit more support is that we are above both these two moving averages. This blue line represents a 100-hour moving average. This green line represents a 200-hour moving average. And you can see the 100 crossed over the 200 right here, tilting the bias more to the upside, leading to this upward channel move. But along the way, the price has been moved below the 100-hour moving average, but it hasn't moved below the 200-hour moving average. That on Friday, the market came down to that level, found support buyers, keeping the bias more to the upside, keeping the buyers in play. And with the work to do, we need to get above the 50%, above the moving averages, so the 100-hour moving average, so on and so forth. So if this, if the buyer is going to be more in control, what do we have to do? Well, we have to stay above the 100-hour moving average on this corrective move. If we can do that and get above the 107.327, we'll look toward the 50% retracement at 107.425. Alternatively, if the price is going to go lower, and we do have the FOMC rate decision on Wednesday, where the Fed is expected to do nothing, keep rates up where they're at, and perhaps even be a little bit more hawkish, at least from the period of the last meeting. We have heard there's hawkish sentiment since that time, but if they are more hawkish, then we'd expect the euro versus US dollar to move below that level, come down, maybe test this level right through here, which was a swing high going back in time near the 106.89, get below the 200-hour moving average and open the door for further downside momentum. So that would be the progression there. So if, depending upon which way you feel, or do you want to be a better seller, then lean against the 107.27.32 level. If you want to be a better buyer, you don't want to see the price move below the 100-hour moving average. And by the way, at 38.2 is at that level as well. So those are sort of the short-term decisions, and then look for momentum on the breaks of either of those extremes to give you further confidence of further momentum in the direction of the break. That's my updated look at the euro versus US dollar. I hope that made sense to you. My name is Greg Michalowski. Good fortune to your trading. Bye-bye now.